Hey, this is Tom, and if you follow Palantir, either you're a shareholder or a potential shareholder, I think this week was a lot of fun. And by a lot of fun, I mean emotionally excruciating. This stock went down from $28.56 on September 24th, remember that date, to $24 in a single week. 15% drop in a single week. This is not something we're used to seeing from Palantir, even though it's been known to be volatile. Now, I want you to remember this date, 24th of September. Remember that date where everything started to go into shit. Now, check this out. In this video, I'll give you two simple answers. As you can see, there's nothing to buy, no discount codes, no courses. I don't want you to click nothing, don't buy nothing, don't smash nothing, don't subscribe to nothing. Just listen up because I want you to have this information. Now, I'll answer why I think this happened, and more importantly, did something really cause it to happen from a fundamental perspective? I mean, does this justify a lower valuation now? Is Palantir worth less, or is this an opportunity to get Palantir for a cheaper price? Again, just my opinion, which means, like any human being, might be wrong, might be inaccurate, might be the complete ramblings of a madman. You still gotta do your own research. I'm not a financial advisor, so just check it out and add it to your research database. So, first of all, what the hell happened? And then I'll explain whether I think any fundamental changes actually justify a lower valuation. So if you ask the mainstream media, the explanation is simple and clear-cut, just the way they like it, nothing complicated. Well, the 10-year bond went up and it took down all the tech stocks. Their usual answer, they just have to copy-paste previous articles. The problem is that that's not really accurate, not at least entirely. I'll explain why. So the thing with the 10-year bond, in case you're not familiar with this theory, that it's like the canary. If you're into mining, so you would know what it means, but even if you're not, I'll explain in a second. So the 10-year bond is an indicator of what the market is thinking about potential future inflation. If the market anticipates a lot of inflation, the bonds are not such a good deal. They pay a low interest rate, and if the money is not worth as much, like a 5, 6, 7% inflation, that 2, 3% the bond pays is basically trash. It's a losing deal. So nobody's going to be buying up bonds in highly inflationary times, and vice versa. If inflation is coming down, the bonds all of a sudden seem way more attractive. And the price of that bond is basically determined, like everything else on this God-given earth, by supply and demand. More people want the bond, the prices go up, the yield goes down. Less people want the bond, the prices go down, the yield goes up. The one thing you need to remember is that the bond yield behaves completely inversely to the bond price. Think about it like a car. You're buying a car. And I want to ask you, how good of a deal did you get? The cheaper you get this good car, the better deal you get. The more expensive you pay, the less quality deal you get. The same thing with the bond. The yield is the quality of the deal. And as the yield actually goes up, it means you're getting it for cheaper, means there's less demand, means people anticipate inflation. So check it out. So now we're looking at the bond market, and on September 22nd, it spiked from 1.33 to 1.54. Sounds like a lot of movement, very incremental, 0.2%, what the hell? But you have to understand that's a 15% spike. It's not that easy to look at it and say that's nothing. In the bond market, that means a lot. So it did spike, and it does mean that a lot of people thought, wait, inflation is coming all of a sudden. But since then, it already went down back to 1.46. So right now, we're not even that far away from the original number. So it did spike a little bit, but if you look at the S&P 500, it's only down like 3.5%. Nothing tumbled like Palantir, 16% in a single week. There wasn't a huge tech sell-off. Tesla is up, a lot of stock are up, the S&P 500 is a little bit down. So I don't think that explanation really fits the bill here. So there's got to be another reason, and there is. Remember that date I told you? Let's see if you can remember it. September 24th. On September 24th, we had a few articles come out basically fueling the FUD. Palantir insider selling is getting worse. Q3, $300 million worth of sales from insiders in Palantir, blah, 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 blah. And there was a specific article about Stephen Cohen. Now, Stephen Cohen is a C-level executive in Palantir and is a co-founder. And there was an article, I'm not going to name the outlet, I don't want to embarrass anybody, but in that article, they basically came out and said, hey, Stephen Cohen just sold $8 million worth of Palantir stock, and now he's down to 592 shares of Palantir, $18,000. He has none. He's sold out. Problem is that whoever wrote this article, and again, not going to embarrass the outlet, simply can't read or won't read. Because the problem with this is that they kept forgetting there's Class A and Class B shares in Palantir, which are completely identical, and Ryan Cohen still has 10.5 million of Palantir shares, which he hasn't sold since April when he got them. Which is something that should have been stated in this article. And if I was Palantir, I might even sue these guys. I mean, this is ridiculous. This is malpractice. Who doesn't check it? I mean, you're a financial reporter. You can't read financial reports. Now, it is true that he has been selling Class A shares for a while, ever since April, just like Alex, for the same reasons that I already explained. He needs to pay taxes because the dude keeps exercising options that he has as a co-founder. And when he exercises these $0 options, he has a taxable event. So no money comes in, and yet he has to pay tax on millions of dollars worth of transactions. How do you expect him to pay? He has to sell these options to pay the tax bill. But if you look at his holdings, they're at 10.5 million flat since April. No changes. But you won't hear this in mainstream media. Of course, false narratives, FUD, and fake news. And that's the big problem with Palantir. If you intend to be a shareholder, you gotta be ready for the FUD. Look, they won't tell you the facts. They're just gonna show you the FUD. The fact is, when in doubt, zoom out. The stock IPO'd at $10 just a year ago. In 1 year, it did 153%, even at $24. The S&P 500 did 30. So it 5x the S&P 500 in the past year, and yet somehow the narrative is that the stock is down. Again, they're not going to tell you the truth. Also, you're going to hear about Cathie Wood selling out. Only problem is that Cathie Wood had 21,000 shares last year, exactly 12 months ago. She now has over 33 million. That's a 1,500% increase. What about BlackRock? They had almost none in Q1. Q2 increased by 430% their holding in Palantir. There's plenty more stories and examples where I can talk to you about FCF, EBITDA, increase in clients, everything. But every time you hear a piece of news, you gotta go and verify it yourself. Read the financials, read the filings. Trust me, these reporters either don't or they do, and they just don't tell you the truth because it doesn't fit their narrative. And as always, a huge, huge shout out from the bottom of my heart to the channel members and the patrons. Because of you guys, I don't need sponsorships, no Weeble links, no nonsense, and I can talk about these sort of things which don't get a lot of views and don't get a lot of ad revenue because you guys keep it going. Thank you so much for supporting me. Thank you so much for watching. If you think this video was good, let me know below. If you think it was bad, let me know below. If you hate me, love me. Hey, I'm an officer in the army of love. Let me know below what you think about it. I'll see you tomorrow.